Welcome back to Breakfast Central. The National Assembly is currently reviewing landmark tax reform bills that will stop federal agencies like the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, and the Nigerian Customs Service, NCS, I beg your pardon, from collecting revenue. This major overhaul was confirmed by Taiwo Oyedele, chairman of the Presidential Tax Committee.
The goal is to streamline tax collection and let these agencies focus on their core responsibilities. Approximately 60 federal agencies will be affected, freeing them from tax collection duties. This reform is part of President Bola Tinubu's efforts to transform Nigeria's tax system, making it more efficient by simplifying tax collection across the country. Now joining us is economist and financial analyst Kalu Adja. Good morning. Thanks for joining us.
How you doing? Good morning. Thanks for having me.
Thanks for joining us. Let's first of all get your quick reactions, to this. Would you interpret this as a great move by the Tinubu administration? And, what more would you have suggested that they do?
I like it. I think it's a very, very good economic move. It streamlines tax collections. It allows folks to focus on the operational side, and it will allow this revenue service focus on the fiscal side. So good derogation of duties, I think is good. We can account for revenues better with this scenario. And it's the same that we have in the UK and the US as well. So I think just following best practice internationally, I think is better for us this way. Yeah, what more would I like to see? Just the implementation, right? So if we can get it done and it doesn't increase taxes, then that works for everybody. We don't want to see an increase. This should just be an efficiency drive, more or less, and that works for everyone like that, yeah.
All right, just to mention here that we're seeing that there are a number of bills, about 4 bills here: the Nigeria Revenue Service Establishment Bill, Nigeria Tax Bill, Nigeria Tax Administration Bill, and the Joint Revenue Board Establishment Bill. Now, if you talk about these being a good move, saying that we're streamlining revenue collation and taxes so that these bodies can be able to function and do what they need to do, why is it that, there's been an uproar by the northern governors who have said that this bill should be dead, or one of the bills should be dead on arrival? They have criticized that, saying that, it's not favorable to the northern part of the country and that it's not going to enable the growth of the region.
Yeah, I think in one of those bills is the suggestion by the president that we should increase derivation. The way it works in Nigeria is that when we get 100 naira, we share out 40 naira based on the principle of equality, then 30 naira goes in principle of population. Derivation is just 10% or 10 naira. What Mr. President is now saying is that it's going to increase the share from the federal to the state. So the state will get more money, but in return, he wants to increase the proportion of derivation from the current 10 to, I'm hearing them saying, about 60%. So the states get more money, but derivation percentage rises in the formula to calculate and share out the federal allocations, what we call FARC. So I think the governors, or the North in quote, is basically worried that their current revenues is going to go down because it's going to be based on derivation and not on land mass and equality. I think that's not really fair, because what this does is it opens up commerce for the states, right? The more you make, the more you keep. 60% derivation. This is how Nigeria was way back in the 70s. So I think it's a bit short-sighted. They're looking at the current and not the future. If you take derivation up to 60 and you can VAT the goods and commerce in your state and local government area, of course you can retain more, and you can basically make your state more viable as a business entity. So I think it's a bit short. They have been a bit too quick to say no to it. And I haven't read the 4 bills, I would say, in particular. They're picking up just one particular part of the bill. When you read the whole 4, you see the derivation part comes in line with allowing you get more revenues, yeah.
Yeah, I think I just want you to expand a little bit more on this 90-70 model that you speak of. I saw that you had also shared a bit, of it. But in the layers or layman, perspective, without any or without too many economic terms, help explain to us, what exactly or how exactly this would work. Because the major challenge that people seem to have is where value-added tax is going to be paid and who's going to be receiving the most of VAT and all of that. So explain it, how this should be beneficial to states across the country.
Sure. I'll give you a good example. Most of the yams in Nigeria, the largest yam farm in Nigeria, or largest markets for yams in Nigeria is in Benue State. When you pay VAT in Nigeria, you are paying to the company where the company is headquartered. So if that yam company, if the yams in Benue are taken to Lagos for processing, but they are sold in Benue, the VAT goes to Lagos State, not to Benue, where the yams are grown, sold, and consumed more or less. So VAT is paid where the head office of the company is domiciled and makes its remittances to the Federal Inland Revenue Service. This bill is saying that VAT should be calculated where the consumption actually takes place. What that means is that, say, if you have MTN or you have Coca-Cola, you have any industry, say food, consumption tax, you pay that tax where it is consumed or where the service is enjoyed, not where the head office is located. This then means that the 36 states of Nigeria become VATable, in quote, not where the head office is, but where you consume the goods and services. So take, for example, tomatoes. If you have a company that says we're going to store tomatoes in Kano and you bill or you VAT that warehouse, then of course VAT stays in the state where that service or that contract has occurred, and not in the head office, say in Kano or in Lagos, where the tomato processing plant is. So it increases revenues. It allows more states to then become economic centers, to then grow revenues and IGRs that we see. So essentially, the bigger states like Lagos might lose some revenues because that's going to be shared out according to where it is consumed, and not where the head office, just a singular head office, is located. That's going to be the big change in terms of the VAT per se.
Right. So even Lagos State that maybe should be affected by this seems to be very cooperative and very excited about this move. But again, back to you've explained why the uproar and the misunderstanding trailing these bills. These northern leaders and the National Executive Council has asked that the bill, so the northern leaders have said that the bill should be dead on arrival. We've seen people like Senator Ali Ndume speak very strongly against it, but the presidency through Bayo Onanuga has said that the bill would go through the legislative process. How do you foresee that this bill will fare? Do you think that the uproar is strong enough to stall it, or will they maybe need to do some modification based on the concerns that have been raised by the aggrieved or potentially affected parties?
I think they haven't explained the bill properly. I think the federal government hasn't really explained the bill properly. So we hear there's gold in Zamfara, there's iron ore in Kogi, there's cobalt, there's silica in Katsina, uranium in Borno. It's all over the north, right? Imagine if you brought those companies into the north and those companies then paid VAT to the states and local governments. Local governments would be able to charge that VAT and retain it up to 60%. If the Northerners hear this, of course, they see it as a big benefit to them to allow solid minerals to be VATed, to allow the processing, the manufacturing of agricultural products to be processed and VATed in the North. So when you explain it better, I think they then see that it's not going to be a reduction in their FARC returns. That's their worry. It's actually going to be an increase. And I heard the chairman of the tax committee say, there will be no reduction in what you're getting. Essentially, the federal government is going to take about 5% from the federal share to ensure that you're going to get a minimum payment from the FARC, i.e. you will not get a reduction in what you're basically earning right now. So if you explain it better, I don't see I think it's an up for you with no downside risk, because if you sign up to this, potentially if you grow maize, and you are able to find a way to VAT that transaction or that contract, you retain 60%. Right now, you're retaining 40% on equality, 30% on population, 10% on landmass. So if you're a small state like Lagos, you are being shortchanged, right? Because it's just 10% on landmass. But if you're in the north and you're able to retain 60%, look at Niger State can say, we are going to look for a way to VAT power leaving Niger State. Look for a way to do it. And you retain 60% in the state and local council. So they have to explain it better. It's politics, there will be a give and take, but I think when it's explained this way, they see the benefits to the state and local governments. I think that way they will accept it, yeah.
Yeah. I think I would like that you also, chip in a little bit more about, what we started with, which is the NEPRC and, customs, for example. For the longest time, we seem to have, gotten ourselves to a place where government agencies see themselves as revenue-generating agencies. Even JAM, will be posting profits at the end of the year, which always seems strange to me. So, do you agree that this new changes or these changes would help these people focus strictly on what they are set up for? And all the while, has the tax, collection distracted customs from its core responsibilities? Or is that, maybe just an excuse, as to why they maybe not have done, as well as they should have?
I think it's in economics, scale of control, do what is your primary responsibility. I mean, you're still going to pay a tax. Customs will still give you a tax bill or an import bill or excise bill.
Yeah.
But the point is that they give you the circular and you go pay. They don't focus on have you paid, go pay to the cashier, bring your receipt to us, will clear your goods. No, they give you the paperwork, you go pay, then customs focuses on looking at your goods and inspecting it. The same with, say, NAFDAC, the same with, say, Nigerian Airways and all that. Essentially, focus on your operational role, give the guy a paperwork to go pay. So the Nigerian Revenue Service can go after you and say, you haven't paid, we're going to take it to court. Customs can't do that. They can't leave the Nigerian ports and start to chase you around Nigeria. But in this case, it's not going to be a secondary payment. You get the circular, it hangs on you, right? You have to pay, otherwise the Nigerian Revenue Service comes after you. So it's a bit of separation of the operational side from the fiscal side. Again, it's best practice. The IRS, collects revenues, but you get charged everywhere you go to. If you want to buy land or you want to import stuff in the US, you get charged, but the IRS collects that, right? So essentially, it's one centralized revenue collection and enumerating agency, allowing the other guys to then do their core operational functions.
All right. I mean, I really look forward to how the implementation of this will be if the bills do pass, especially because, there have been people who have been profiting from this gap and this lacuna that we're currently experiencing, and the fact that also we have a data collation problem. I guess in the next couple,
a lot of leakages.
Yes, we'll see how this will play out. Kalu Aja, thank you so much for joining us. We do appreciate your time.